Hi there, welcome to Kneppy Invest. One of the benefits of me doing this channel is the ability to share ideas with you, but it also is reverse. I have viewers sharing their ideas with me. And that is true for the company I'll be featuring in today's financial year 23 result video, Silk Logistics Holdings, a recent IPO on the ASX. This was a suggestion by one of the viewers of this channel. And to be honest with you, I had never looked at this company in the past. And one of the reasons why is because it did recently list on the ASX. Now, you can draw a lot about a company just by looking at the name, Silk Logistics. So straight away, this is a logistics company, possibly to do with silk, but that would not be accurate. Now, I do write notes when I am researching a company, and I did write down, you can find the history or look at the history of Silk Logistics on page 10 of their annual report. And it's an interesting history because this company was established over 100 years ago, began as Hoffman Transport, and it was established as a horse and cart operation, providing cartage services in Melbourne. And there was four other companies over time that led to Silk Logistics Holding being formed in 2008. Those companies were Doolan's Heavy Haulage, Bunker Freight Lines, W8 Freight Lines, and Kagan Logistics. Those five companies were brought together to form the Silk Group in 2008. And this company then listed on the ASX in 2021, July 2021. So we're talking about Silk Logistics Holdings being on the ASX for just over 2 years. So that is probably long enough for some investors to become interested in researching or further researching this company. But I do know there are some investors out there who want at least 10 years of history. So you don't have 10 years of history with this particular company. Now, Silk Logistics Holdings have two divisions: Port Logistics, which provides wharf cartage services, and Contract Logistics, which is warehousing and distribution services. So let's have a look at Silk Logistics Holdings financial year 23 results. But before we have a look at these results, what are the next five companies I'll be looking at in this particular series? The next five companies I'll be featuring in this series are Pure Profile, Alcidion, Perpetual, EZZ Life Sciences, and Elders. And I still have maybe 30 to 40 companies to get through in this particular series. And in fact, after Elders, I've already decided upon BHP, eCargo, and Nanosonics. And when I say decided, I actually draw the names out of a hat. So it's not really deciding, it's just luck of the draw. Now onto Silk Logistic Holdings financial year 23 results. And I'm really going to be really thankful for whoever suggested this company because Silk Logistics looks really interesting. Not the company itself, but just the valuation of this company right now. Share price is in a bit of a funk, has fallen a fair bit. You'll be able to see that when we look at the chart at the end of this video. Now onto the results. Revenue, almost 500 million, up 23.8% on last year. Now this company did make a couple of acquisitions and that did help the revenue increase. Statutory profit, 16.4 million, up 22.4 million from last year. Underlying profit was 15.9 million, but 5.4 million IPO expenses in 2022, which means if you take that into account, profit went backwards in financial year 23. Gross margin, 41.5%. Operating cash flow, 17.2. But I also should mention that their reported operating cash flow was 60.5 million, but they do have lease liabilities of 43.3 million, which I actually include in operating cash flow. So their reported operating cash flow is significantly higher than what I have shown you here. Free cash flow, 10.1 million. Probably I should also mention that 42.5 million or $42.7 million of their increase in revenue, which was 93.9 million, was due to the acquisition of FFS and 101 Warehousing. So those two acquisitions did lead to about a 45% increase in their revenue. And I completely forgot to mention this company has virtually zero net debt. So didn't even bother mentioning that because it's not really relevant for the Silk Logistics right now. Equity, 75.4 million, nice increase from last year, which was 66.9 million. Return equity, that is a really good number, 22%, but return invested capital, 7.2. So that's probably lower than what you would want. Return equity, probably higher than what you want. So combined, those two quality metrics are about where you want it. Just would like to see return invested capital a little bit higher. However, how some platforms calculate return on invested capital is a little bit different from other platforms. So you can see a wide range of numbers when it comes to return on invested capital. Even return on equity can be quite different from platform to platform, but nowhere near as different as what you would see in return on invested capital. 81.5 million shares on issue, which means the market cap of this company at the end of trading on October the 3rd is only 142 million, which does seem a little bit low for all the metrics you saw on the previous slide. So profit, operating cash flow, free cash flow, market cap of only 142 million. This company also has a dividend, and dividend yield is at 4.7% for this company. So yeah, so when I actually did compare the market cap of this company to the profit and operating cash flow, I did become a little bit intrigued, or more intrigued by this company. I wouldn't be that intrigued with Silk Logistics if the valuation was probably fair or maybe even overvalued. But the PE ratio of Silk Logistics is only 8.8, price book 1.9, EV to free cash flow 14.3. That's because the free cash flow is a little bit less or lower than operating cash flow and the earnings or profit. So keep that in the back of your mind as well. Also did a reverse DCF based off the earnings per share. And with a PE ratio of 8.8, the market is not expecting much growth from this company. In fact, with that reverse DCF, all they would have to do is increase the earnings per share by 0.4% per year to justify the current valuation. So there is an argument, there is some value in this company right now at $1.74. Another thing I like to do for all companies, particularly if they have different divisions, numerous divisions or that sort of thing, is just to see a breakdown or a disaggregation of revenue into those divisions or even into different geographies. So in this particular slide from their presentation of the financial year results, they have broken down their results into the two different logistics divisions, port logistics and contract logistics. Both divisions have grown nicely from last year. Now, one thing I do like to look at is margins. Which division has a better margins? Now, if you compare financial year 22 to financial year 23, you get different outcomes. So back in 2022, you'd probably say the contract logistics division had the better margins. But if you look at financial year 23, you might think differently, particularly when you look at underlying EBIT margins. But both divisions saw pretty nice growth in revenue. Contract divisions grew their revenue by 30.9%, port logistics by 19.2%. So nice growth overall in this company, but some of that growth was because of acquisitions. But even if you take away the acquisition growth, there was some nice organic growth. And if this company can continue to grow organically, again, this company does look like it might be attractively valued at a market cap less than 150 million. Now to the chart for Silk Logistics. This goes back to July 2021 when the company listed on the ASX. And this is a fairly boring chart, particularly between July 2021 and around about April 2023, because the share price just went sideways. Just consolidating, range bounding between about $2 on the low side and about $2.68 on the high side. Nothing at all interesting. And it's another reason why I paid zero attention to this company, because the chart did not look exciting at all. Now, there is an argument that as soon as share price fell below $2, that was a sort of an argument the share price had moved into a downtrend, and that was around June, July this year, and the share price has fallen to a low of $1.60. A nice bounce since the low at the start of September, but it doesn't look like this bounce in the share price has any power. We haven't seen a lot of volume coming in. So fund managers aren't that interested in this company, even though there is an argument that there is some value in Silk Logistics right now. Now, that could be beneficial for the company moving forward. If enough investors see value in this company, that should help prop up their share price and keep the share price from falling any further below $1.60. So I have put Silk Logistics onto my watch list simply because there is an argument that this is a value play on the ASX right now. That's all I have for this video, looking at Silk Logistics Holdings financial year 23 results. Just want to thank whoever suggested this company because I more than likely wouldn't have looked at this company otherwise, because the chart doesn't look that good. But the numbers actually do look good, and the valuation looks intriguing right now. And this is the sort of company I could imagine myself just taking a position in because of the valuation. And I probably would also like to see the share price move into at least an uptrend or the beginnings of an uptrend, that sort of thing. So I have put Silk Logistics Holdings onto my watch list, and I will be paying attention to the share price moving forward. So if you have any questions or any thoughts about this company, maybe you're a shareholder of Silk Logistics and you'd like to talk about why or discuss why you're a shareholder of this company, love to hear your thoughts. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.